What up, gang? Yep. So I wanted to talk about a few different things. I might be kind of all over the place, you might say, on this video, but I really hope people understand what's really going on with this crypto market and Bitcoin specifically in finances, like the global financial economy that is going on right now, which still presents a great opportunity, but we're really closing in on the time of how we can maximize the advantage that we can take. And the reason why I want to do this video and I want to show you a couple of things is simple. Overall, at the end of the day, Bitcoin was created for the average individual to be able to leverage with technology what we couldn't in the past. Bitcoin was literally created as a response to the 2008 market collapse. So when banks' lack of regulation, corrupt and greedy policies created a financial catastrophe in 2008, 2009, Bitcoin was created to counter that. So we don't have to, at least we could have the option not to have to rely on traditional finance, traditional banking, so that we could have a way of peer-to-peer transactions that doesn't rely on an intermediary. It was created for the people, basically. It was a revolutionary idea brought forth by Satoshi Nakamoto, salute, in order to have financial sovereignty, control, more privacy, and not have to depend on people who may be in some type of way compromised, corrupt, or incentivized to not be fair. This is what Bitcoin was created. And then we have DeFi, which in essence, DeFi is the ability to do with our assets the same type of things that corporations and especially financial institutions do to make money. We're going to get to the halving. We're going to get to all this. I just want to set the framework for the reason for this video, especially if you're new or newer. So the way banks make money, in part, there's two main ways that banks make money. First, they loan money. So they collectively take our money that we put in the bank, and then they loan it out for percentages higher than they pay us per year. So your bank may give you 0.5%, maybe 1% a year, but they'll loan out our money. And depending on the type of loan is depending on how the type of percentage they'll get. So credit cards, they can get up to 30%. Mortgages, usually about 5%, a good percentage rate. Typically be about 3 to 5, depending on what the interest rates from the feds are. But, you know, when you're talking about several hundred thousands or millions of dollars in mortgage, that's still a significant amount of profit. They'll loan it out for business loans, college loans, personal loans, auto loans, etc. And they get percentages when they get paid back. So they're using our money to loan it out. That's how they make money. So these are the same kind of things you could do on DeFi. Another thing that they do, which you could also do on DeFi, which I actually do, is they take our collective money and they invest it. So many times they'll invest it in maybe low yielding but low risk things like bonds and treasuries or whatnot, but not always, as we've seen with Silicon Valley Bank. Sometimes they do invest it in more higher yielding, higher risk investments, endeavors, which is fair, it's legal. But when they make a ton of money off of those investments, they're still only paying you an annual percentage rate, an interest rate for holding your money that doesn't even keep up with inflation. It doesn't even come close to keeping up with inflation. So that's how banks make money. So within DeFi, You can do those things yourself. You can lend money. You can borrow money and reinvest it off of your collateral. You can sit your money in a lending pool, and since the other side is collateralized, you don't have to worry about if they're going to pay you back or not. Or you could just stake your coins. You could help secure networks and stake coins. You could, the same thing you're doing to help secure the banking network by letting them hold your money. You could do that yourself and just get paid dividends, kind of like stock dividends. Just for holding that crypto, you're getting paid back money for holding that. And in many cases, especially in times like this, when the bull run is very much well and alive, then not only is the asset you're holding appreciating in value, but you're also getting paid back in that asset. So you're actually growing that asset. You're actually creating more of that asset just by holding it. I'm talking about the Cosmos, the Tezos, the Cardanos, the Solanas, any stakeable coin. You're actually building your coin just by sitting it there, and the value is going up. So that's a double-double. And I tell you this because this is precisely why I told you 2019, when I first started CryptTalk podcast on Twitter and YouTube, this is why I told you, like, you're not going to see this news on the mainstream yet. The yet was because I understood that once these banks and other financial institutions, once these corporations, governments even, once they start creating and deploying their own products and services on the blockchain, not exclusive to crypto. It could be crypto, it could be other things. But I understood that once they have products and services that they're ready to make available to the public, then you'll start seeing the mainstreaming of crypto. And if you think about it, it's 2024 now. The last 5 years, we've been seeing that start to ramp up, right? We've seen crypto commercials, exchange commercials on TV, Super Bowl. We see them on social media. We see Bitcoin ATMs. We see Bitcoin exchanges or is Bitcoin, like the Coinstar, you can now get Bitcoin. You can go and put your coins in the machine and get Bitcoin. We got ETF ads on Facebook, Twitter, etc. We're seeing the mainstreaming of it now because these ETFs are now traded on Wall Street. So now the traditional financial industry, which has heavy influence on the commercials who didn't want to put Bitcoin on a commercial before that Bitcoin could be bought through a centralized platform like Wall Street, BlackRock, Grayscale, Fidelity, etc. So now it's okay. It's more safe to put it on the mainstream when they're advertising their products and services that are affiliated with traditional finance. That reason being because, like I said before, if people understood how to deal with decentralized protocols themselves, if they knew how to go to a decentralized exchange, enter a DeFi protocol, stake, lend, borrow, provide liquidity, yield farm, etc., on their own, and produce a lot higher output of annual percentage yield than the bank is going to pay them, what do you think they're going to do? If you have $10,000 that you're not going to do anything with, you're just sitting it in the bank. I know people have tens of thousands of dollars just sitting in the bank, and I've been trying to tell them, like, yo, that's just like that. You can use that, and I understand people don't like the volatility of some of these coins. That's cool, but if you're only going to sit your money somewhere anyway, well, what if you knew how to turn that money into a stable coin and then put that and stake that in a DeFi protocol and make 8%? Versus the bank, which you might make $8 per 10,000. So this is why they couldn't put it on the mainstream as of yet, but you're starting to see it more and more. Now let's get to the halving. What is the halving? What's the significance of the halving? 63 days, just over 2 months by this calculation. Of course, it fluctuates, a few days because it's not really a time. It's more of how many blocks are mined before the next halving. So according to the pace, some people calculate it'll be 63 days. I've seen it as low as 59 days from now. So about 60 days from now, we're going to experience the next Bitcoin halving, which means that less Bitcoin will be entering the market. I'll show you a video just so I can break it down. But I'll just explain it like this. Just some very easy to understand, clear layman terms. What the Bitcoin halving is, imagine gold, which is also mined, right? So imagine that maybe there's a ton of gold being mined out of the earth and put into the marketplace every day. So imagine every day there's 1,000 tons, or 1,000 tons or 1,000 whatever of gold being mined and put into, refined and all that, and put into the marketplace. Jewelry, gold bullions, etc. 1,000 every day. So imagine in 60 days, instead of 1,000 being pulled out, there'll only be 500 pounds of gold or tons, whatever I said before, being pulled out the earth. So we went from 1,000 to 500. That means that gold entering the market is being cut in half, which means that gold becomes more scarce, which means that even if the demand stays the same for gold, well, math dictates gold will probably double in value. That's what the Bitcoin halving is. 900 Bitcoins entering the market via mining every day. Will come April, that gets cut in half. It's only going to be 450. So if the demand stays the same, we're probably looking at Bitcoin doubling. It's done far better than that every halving, but just by simple mathematics, very conservative expectations, we should see Bitcoin at least double. But here's the catch. The demand for Bitcoin isn't staying the same. It certainly isn't falling. The demand is actually increasing. The demand is increasing so much that we have 12 large financial instruments, investment instruments, vehicles, BlackRock, Fidelity, Grayscale, ARK, etc., buying up Bitcoin so that they can offer it via ETF to their customers. You have MicroStrategy eating up Bitcoin. I'm going to show you some stories in a minute. So the demand is actually growing. But the output is going to be cut in half. People need to understand this because, like I said at the beginning, Bitcoin was created for the everyday individual to be able to prosper and be able to safeguard themselves from having to rely on intermediaries and centralized traditional finances like banks. So now when we see that these same banks, these same rich individuals in money markets that once ignored Bitcoin, then they mocked Bitcoin, then financial regulators fought Bitcoin. Well, now they're buying Bitcoin. And the idea behind it is, like I said before, if they can't beat them, buy them. So they know they can't stop people from naturally gravitating towards Bitcoin. The more people understand, the more people wake up, the more they understand, the more they gravitate naturally to Bitcoin, to a decentralized way of dealing with finances. It's natural once people understand what it is. Once people really understand what it is. Most people who really understand what Bitcoin is, beyond just a speculative asset that you might be able to make money. When you really understand the fundamentals of it and you understand economics, when you understand money, what money is, naturally, you're probably going to gravitate towards Bitcoin, which is going to open the floodgates to everything else in the crypto space, meaning that you'll have to navigate through the shenanigans. But if you have a sound fundamental understanding, that won't be too difficult. Now, let's go ahead and get an overview of what the halving is before we really get into this video. Let's go.
The Bitcoin halving, known as the halvening, is a pivotal event in Bitcoin's world. It is a programmed adjustment occurring approximately every 4 years or every 210,000 mined blocks. It greatly affects the supply of new Bitcoins, impacting miners and investors alike. Essentially, the halving reduces the rate of new Bitcoin generation and its addition to circulation. This is achieved by cutting miners' transaction validation rewards. Initially, miners received 50 Bitcoins per successful block. With each halving, this halves, first to 25 in 2012, then 12.5 in 2016, and 6.25 in 2020. The halving matters due to Bitcoin's capped supply of 21 million, setting it apart from fiat currencies. It maintains scarcity by reducing new Bitcoin issuance. Economically, reduced mining rewards may affect miners' profits and the network's security. Investors often anticipate price increases post-halving, as historical data indicates. Lower supply and sustained demand can lead to upward price pressure.
Hold on real quick, man. There we go. And there's more confidence in that than in JP Morgan Chase as a bank. All right, so I knew I shouldn't have tried something new. Tried to do something new, you guys. There we go. Jeez. Don't worry. On the replay, I'll cut that out. I'll cut that out the replay. So anyway, as I said, we have $1 trillion market cap in Bitcoin. $1 trillion market cap in Bitcoin compared to the biggest bank in the US, as you can see, which according to Trade and Economics, JP Morgan reportedly reports 518 billion in market capitalization as this, according, this is yesterday's numbers. So Bitcoin has twice as much in its market cap than JP Morgan Chase, which has probably been around at least 100 years. Bitcoin has twice as much market cap as JP Morgan Chase. How many people heard of American Express? Well, they have 136 billion market cap. Let's put that in perspective. Ethereum, the second leading cryptocurrency, has more than American Express's market cap. Like if you're not paying attention to this, then this may not resonate. You don't understand the significance. And of course, like I said, it's not going to be on the mainstream. Imagine if this was mainstream 10 years ago, there would be probably almost no banks in existence right now. And I'm not saying that we don't need banks. I'm not one of those. I'm just saying when people understand what you can do with blockchain technology, it just makes banks less necessary, honestly. It just does. This is why the banks, which I'm going to show you later, is jockeying for the right to custody crypto because they understand, look, it's not looking good for them. Let's get back to some of these market caps, though. Just want to show you something. Where were we? Oh, we're here. Okay, so check it out. What else we got? Wait, did I even show you what I thought I showed you? Just to make sure that you guys understand, I'm not just making things up. Yes, this is Ethereum. Bam. Market cap for Ethereum, 333 billion. Now let's compare that. So just look at Bitcoin, $1 trillion market cap. Ethereum, $333 billion market cap. Now let's compare that to other banks and other financial established institutions, all right? So we already seen that JP Morgan Chase is sitting at 518 billion. So about half of what Bitcoin has, right? We understand that. Now we get to American Express. They're sitting at 136 billion. So they don't even have as much. They don't even have half as much as Ethereum. What is this telling you? What else? Bank of America. I know you've heard of Bank of America, right? Well, Bank of America is sitting at 266 billion. So far, we can add the top 3 banks in the US, and they don't even touch the market cap of Bitcoin. Okay. What else? Bank of New York Mellon. I think that's a pretty old established bank. 40 billion. That's like, it's like XRP. That's like, let's see. Let's just see. 40 billion. Keep that number in mind. Let's see if there's any cryptos that have more than 40 billion in the market cap. All right. Let's see. Tether has 97. BNB has 52. Solana has 47 billion. XRP has 30. So there's where it stops. So Solana, the top 5 cryptos have more market cap than some of the largest banks. right? So I just want to show you this so you can understand like what they're not showing you and why they're not showing you and how significant this is and why it's important for us as individuals to understand this. This is why these large corporations, these large investment vehicles like BlackRock, etc., this is why they're gravitating towards Bitcoin and buying it all. This is why MicroStrategy is buying all this Bitcoin. They're not buying it to sell it. They're buying it to keep it and then give you an ETF, meaning you don't really own it. With that ETF, you can't enter the DeFi protocols with an ETF. You can't send your ETF as a payment. You can't accept your ETF as a payment. And if the company that holds those ETFs go out of business or just pull the rug or whatever, it may be insured. You may be able to get it back after court litigations or whatnot, like FTX. People ain't got that money back from FTX yet. And you can't really do anything with it after market hours. So you don't really have the control, the sovereignty, the privacy. You don't have any of the real principled advantages of holding Bitcoin yourself. However, for some people, that'll be fine. For instance, now that Fidelity has an ETF, I'm going to talk to my Fidelity person again, because I talked to him a couple of months ago. They didn't have Bitcoin as an investment for my 401k. In fact, he asked me, why do you want Bitcoin? That's pretty volatile. Should have fired him right there, but whatever. I just like, just put my money in low market cap mutual funds, whatever. But now they have Bitcoin ETFs. And typically I wouldn't hold a Bitcoin ETF, but since my company matches up to 10%, then, I guess I can get an ETF Bitcoin for that purpose. And then that could just be like what I cash out, because I don't plan on really selling my physical Bitcoin. But anyway, I'm just showing you guys this just so I can set some type of stage or some type of energy, or so you can understand where I'm going with this. Let's see something else here. Now let's get to some of these things right here. I've reported on these things before, because banks, not just Wells Fargo, banks overall have been doing a few different things in 2023. We've seen the 3 biggest bank failures in history of the United States in 2023. We've seen 3 banks collapse in 2023. They collapsed for the same reason, because people lost confidence in them. And like I said, all banks are fractional reserve. That means for the banking system, like people say that Bitcoin's a scam. I would argue that banks are a scam. I'm not saying they're not necessary. I'm not telling you to close your bank account and never deal with the bank. That would be virtually, you can do it if you have enough know-how, but I wouldn't recommend it at this point. All I'm saying is banks take our money, and since we deal with a fractional reserve banking system, I've explained this before on CryptTalk podcast, that means that they don't have to have all the money. So like, let's say we collectively have $1 million in this bank over here, whatever bank you want to name it, whatever you want. We have $1 million, all of us collectively in that bank. That bank doesn't have to keep that $1 million that they're holding for us. Remember, it's our money, but they don't have to keep it. They only have to keep 10% of it. The rest of it, they can loan out and they can reinvest in other things, while they give us a small percentage of 0.5%, 1%. And then they invest it and they make all this money. And then when they collapse, guess what? They still keep that money. So if you guys have ever paid attention to like what happens when these banks collapse, especially 2008, 2009, then you may know that a lot of these CEOs, they still got $50 million bonus, $20 million, $100 million bonuses. Well, how can they get those bonuses if the bank collapsed? It's simple. Because that's the profit, that's their cut of the profit that they made investing your money. It just so happens they didn't keep that money in the bank. So if too many people try to withdraw their money to close their bank accounts, or they just need their money out the bank, they don't have it. they go insolvent, then they collapse, then they're done. That's how banks collapse. They don't have the money that the customers are requesting. If everyone went to their bank right now to try to pull out all of their money, it's not there. Maybe 10% of it is there. It's not there. Ironically, this is also how FTX collapsed, but I'm not caping for FTX. I'm just saying FTX didn't do anything outside of what banks do. We'll get to the FTX and the Binance situation in a minute. But Wells Fargo in trouble? The Federal Reserve policy of continued rate hikes have decimated the return on fixed income securities, causing investors to rotate out of low-yielding assets and search for more profitable options instead. So we're seeing a shift in what is being considered value. I've showed you the gold to Bitcoin ETF outflow and inflow. Bitcoin is lapping. Bitcoin ETFs is lapping gold. Traditional finance is kind of on shaky grounds right now. That's why they're all scrambling to integrate blockchain, Bitcoin specifically, but not exclusively. Let's see what else we got. Unlike many other banking catastrophes of late, the outgoing turmoil of 2023 stems from more a crisis of liquidity than it does from a lack of underlying capital, liquidity, meaning they don't have the actual money to flow because they're putting it in other things. Ultimately, this demonstrates at the bottom here. No, here we go. Let's go to this one. The fact SVB, which is Silicon Valley Bank, was a well-run business. It posted a 57% improvement to its core fee income for fiscal 2022, the year before it collapsed, and boasted a healthy credit metrics in the most recent January earnings report. Ultimately, this demonstrates that if banks can cover an unexpected spike in withdrawals, they're probably immune from the worst of this enduring calamity. Unfortunately, that they don't, though, because they don't have to. So when people try to take their money out, they don't have it. They just close the bank. So what happened at SVB, Silicon Valley Bank, is a couple of different things happen. Okay. Like I said, banks don't keep your money in the bank. They wouldn't make money like that. They loan it out for percentages, credit cards, etc., mortgages, etc. And then they also invest. Typically low yielding bonds and treasuries that are usually low risk. And then they'll invest in other things as well. They can take higher risk if they want. So, but around that time, what happened is the feds increased the interest rates. So now some of those investments they made were in the red. Some of the big venture capitalists that held their money in the bank seen this, and they decided to start pulling their money out the bank. Word leaked to the rest of us, and they start pulling money. It wasn't all there. They collapsed. This happened to 3 banks last year. So banks are collapsing. Banks are closing branches. I've showed you that before. Why are they closing branches? Because a brick and mortar model isn't very profitable in lieu of digital banking, because they have to pay a lot of overhead. This is why if you've ever banked with an online only bank, they can pay you higher annual percentage ratings. They're doing the same thing as the traditional brick and mortar banks. It's just they have less overhead, so they can afford to pay you a higher percentage. But if you're going to do that, then you might as well learn how to deal with these decentralized protocols on the blockchain, where you can get a lot higher annual percentage because there's no brick and mortar, there's no staff or very little staff. It's ran by code, auditable, transparent code. What else we got, man? Here we go again. Check this out. Here's another reason why people are starting to not really rely on banks like they used to. Data breach affects 57,000 Bank of America accounts. This was just a few days ago. A data breach at Infosys McCormick, a financial software provider, compromised the name, address, date of birth, social security number, and other account information of 52,028 deferred compensation customers whose accounts were serviced by Bank of America. Data breach means, it's probably hacked, or who knows how, but most likely it was a hack. The unauthorized party, apparently a ransomware group known as Lockbit, accessed the customer's information through Infosys McCormick's system, not Bank of America's, according to the letter. Who cares? You still got the same information. And this happens a lot more than you know. I used to bank with a specific credit union years ago. And like every year we get at least one email or letter. Oh, yes, there's been a data breach. Don't worry, your funds are safe, buzzy, blah. Banks get hacked and breached all the time. So like in light of these type of things happening, and then you have Bitcoin, which is a lot more secure. It can't be hacked. Your wallet can't be hacked, can't be compromised unless you keep your funds on a centralized exchange, Coinbase, BlockFi, FTX. Unless you keep your assets on a centralized exchange, it's virtually impossible. I won't say it's impossible. You can do certain things that would expose your funds to be vulnerable, like hooking them up to centralized format or platforms, or not being careful with different things. It can happen, but the chances are a lot less. So we're seeing banks collapse. We're seeing liquidity exit banks. We're seeing branches being closed down, and we're seeing them being compromised and data being compromised. And this is why, as people learn more about Bitcoin, and when I speak of Bitcoin, I could be speaking of other cryptos as well, but I'm going to say Bitcoin because as Bitcoin goes, the rest of the market goes. And because Bitcoin is the foundation of this blockchain and cryptocurrency space, I'm saying Bitcoin, could be inclusive to many other projects as well. Then we have stuff like this happening. All I'm doing is I'm making the case to why people need to understand. And I'll be honest with you. I've been kind of like on the fence. I've been on the fence. Like, is it even worth trying to orange pill people into the market? I mean, because there's really not enough Bitcoin to go around, because, these large, Black Rocks and these, micro strategies, Michael Saylor personally, not just his company, but him personally, they're buying so much Bitcoin. There's not really enough Bitcoin to go around, especially because in April, we know the production of Bitcoin gets cut in half. So I'm in between, like, who cares if everybody else don't get it? I'm going to get what I can get. But the big picture, why I can't do that, is because doing that would willingly relinquish our power over to the 1%. So if the 1% owns all of the Bitcoin, they can control the market as they've already been manipulating. So the way that we're able to have some type of sovereignty and some type of power and some type of means to participate in the greatest wealth transfer we have ever seen in human history is that we have to know this stuff, and collectively the little man has to have access to Bitcoins. Even if you'll never yourself own a full Bitcoin, that's okay. There's other cryptos out there. You should own Bitcoin, in my opinion. There's other cryptos, and then not only that, the DeFi protocols in which you can do things to increase your wealth, they exist, and they can be utilized if you know about them. If you don't know about them, you're probably going to be subject to, because at some point you're not going to have a choice. They're going to buy up all the Bitcoin. They're going to offer it back in derivatives, ETFs. They're going to make all these products and services that will just basically mimic what is already being done on the blockchain. They're just going to mimic it, centralize it, package it. You're not going to do as well with them because they have to make money. But if you know how to do it yourself, you can actually build wealth. It's not just about the speculative aspect of, I'm going to buy this coin, it's going to go up, even though that is a big part of it. We're experiencing a wealth transfer bigger than the oil boom. We're experiencing a wealth transfer bigger than the gold rush. The difference in this one is that the oil boom and the gold rush, you already had to have money and resources to be able to make money off of those things. You had to be able to relocate, have the equipment to mine oil. You don't mine oil. You drill for oil and refine it and all that. You'd have to have the equipment to move, sustain yourself as you mine for gold. And both of those things weren't promised. You could be mining for days or weeks or years. Damn, this is the wrong place. Ain't no gold here. Oh, dang, this is the wrong spot. Ain't no oil here. Let's move over here. So you pretty much already had to be rich to participate in those wealth transfers. Well, this one, all you need is a smartphone and an internet connection. See, back in the days, in order to really play the stock market, before the digitization of stocks, you had to go downtown, hire a stockbroker. You couldn't just buy 3 stocks. You had to have money because they had to get theirs. The broker had to get theirs. See, the digitization of assets has made it more accessible. It's lowered the threshold. It means you don't have to, you only have $50 from your paycheck to invest in something. You can do it now. DeFi, decentralized finance, means that we can do the same thing that these large corporations and banks do to make money. The same way they make money off of us, now we can make money ourselves. And we don't have to have $1 million or $2 million to get into the game. Of course, your $100 going up 10% isn't the same as $1 million going up 10%. But if that's what you got, that's what you start with. This is the opportunities that a lot of people, I think, they're not seeing it. And they're not seeing it in some cases because it's not going to be on the mainstream. Like I said, they're only going to mainstream it as they produce their own products and services. But those products and services won't yield you the same. Those products and services will be controlled by them. Warren Buffett warming up the Bitcoin. Honestly, I don't care if he warms up the Bitcoin. I don't care if him or Peter Schiff. I don't care about any of those that are anti-Bitcoin. Who cares whether they do or not? To me, it doesn't matter. I don't care. But it just shows you that the same ones who fought it are now starting to have a change of heart. We've seen this with JP Morgan. We've seen this so many different times. And he does, as this thing says, let me see here. However, Buffett, so he's always been anti-crypto, right? But Buffett's strong anti-crypto stance may change after reviewing the firm's performance in 2023. So he doesn't invest in Bitcoin, but as it says right here, he does invest in a Brazilian fintech, New Holdings LTZ. The company owns Nubank, a neobank that offers credit cards and banking as well as crypto trading for users. It offers 15 different tokens as well as its own utility token called Newcoin. The company went public December 2021, but had received backing from Buffett and Berkshire. Blah, blah, blah. They made a whole lot of money. So now they're saying, hey, maybe Warren Buffett is going to warm up the Bitcoin. I don't care if he does, honestly. We don't need more billionaires getting into the market, buying up all the Bitcoin that's supposed to be for us. We don't need it. But they're doing it. They're starting to change their tune, and they all understand this right here. This is what they understand right now. This is why Michael Saylor is selling, I want to say 20,000 of his own stocks to buy Bitcoin up until April, because they understand this halving, which is happening in about 60 days, means that Bitcoin will become more scarce. And according to the historical events that occur after the halving, the last halving made Bitcoin go from the previous all-time high of 20,000 to 70,000. That's a 3.5 flip. So now the last all-time high is 70,000. And if Bitcoin carries the tradition that it did last year, this is why people are calling for a $250,000 Bitcoin. I'm not going to tell you that it's going to go to $250,000 this bull cycle. I don't know. I will stand on business when I said that I do believe Bitcoin will definitely hit 150,000. That would only be doubling the last all-time high. And why wouldn't it? Because the production of Bitcoin is being cut in half. So if the demand only stayed the same, it's going to 140. That's just if it stays the same. But do you think 12 Bitcoin ETFs being traded on Wall Street means that the Bitcoin demand is staying the same or increasing? I'll let you answer that. Do you think the fact that MicroStrategy owns almost $200,000 or 200,000 Bitcoin, and their CEO and their director is selling shares to buy more Bitcoin personally, do you think that means that the demand is just staying the same? Do you think that if the top U.S. banking leaders are vying for spot Bitcoin ETF custodialship, what does that tell you? The demand is definitely growing. So here we go. The HODL, the daily HODL reports. Y'all see this? Yeah. The daily HODL reports Valentine's Day. They sent a love letter to the SEC. Roses are red, violets are blue. You gave ETFs to Wall Street. Well, we want some too. Bars. Yeah. Yeah. This is what they're doing. They're like, yo, U.S. banking giants are writing a joint letter to the U.S. Securities and Exchange Commission arguing for spot Bitcoin exchange traded fund custodialship. They want Bitcoin. Rich people want Bitcoin. Banks want Bitcoin. Retirement IRA issuers want Bitcoin. Investment vehicles, Wall Street, they want Bitcoin. Governments want Bitcoin. Did you know that the U.S. government holds about $6 billion worth of Bitcoin? No? Oh, they didn't do a press release telling you that? Of course not. You know, El Salvador, they own a lot of Bitcoin. They've made it legal tender. A lot of other countries in the region are doing the same. Countries in Africa, Asia, Eastern Europe, they're doing the same. Do you think that the demand for Bitcoin is going up or down? Simple question. If you believe it's going up or just staying the same, but the production is going to be cut in half, this is why I say Bitcoin easily hits 150. I would say by first quarter next year. I would say by about this time, 2025, Bitcoin will be over 100,000. And if Bitcoin is over 100,000, then some of these altcoins, they're going to flip massively. That's what I see happening. That's how I am, strategizing my own exit strategy. Right? Look at this. The letter was sent on Valentine's Day by 4 industry leaders, addresses SEC chairman, the crooked Gary Gensler, and asked him to modify a law passed in 2022 that regulates crypto custodialship in light of several key developments, such as the approval of spot market BTC EFTs. So they're like, yo, we want in. Your banks want in. They've wanted in for a long time. I've reported this before. So there's that. Now let's end this with a little bit about, let's go to Binance. And so this is significant. The reason I want to show you this, did CZ play himself? Did the CEO of Binance play himself? the sentencing of former Binance CEO Changpeng Zhao on a money laundering rule change has postponed the until April 30th. So a notice in Seattle federal court. Oh, I didn't know it was Seattle. Man, I should have went to that. I think I'll go to the sentencing. I was wondering, you know what? Interesting. I was playing poker not too long ago in Seattle, and I was sitting at the same table. This guy who was wearing a Binance jacket, this Asian dude. He kind of looked like CZ, but I'm sure it wasn't because we weren't playing high enough stakes for a billionaire. But he was wearing a Binance jacket. I was like, "Hey, what's up? Hey, Binance, blah 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 blah." He didn't speak all that great English. Maybe it was him. Shit, should have hit him up. But yeah. So I didn't know that the court was actually in Seattle though. So Zhao, a resident of United Arab Emirates, who was known as CZ, is free on $175 million release bond in the United States. He pled guilty November 21st to a charge of failure to maintain an effective anti-money laundering program at Binance. That's him. So the guy didn't kind of look like him, but kind of more chubbier. So the criminal sentencing of Binance founder CZ, we'll call him, on a money laundering, that's what he's actually known by, on a money laundering rule charge has been postponed until April 30th, according to a notice Monday in Seattle federal court. If I knew that was in Seattle, I'd have been there. April 30th, that's around the time of the halving. Like a lot of different things are happening during the time of the halving. Like April is going to be wild. April is going to be wild for the crypto space. But the reason I asked if he played himself, and I don't wish any bad on this dude at all, right? He didn't rip anyone off. He ran a respectable business. He did what he did. Now, he did do some shady things when it comes to throwing the FTX Sam Bankman-Fried under the bus. Like, he pretty much set up FTX's demise out of some competitive shady shit. He even tried to do the same to Coinbase. And let me show you something. So when that whole FTX situation went down, so this is my Odysee page, right? This has archived all of my CryptTalk podcast videos. So, I lost my channel because I was exposing the scam. GS Partners, Caribars, I was exposing them, and they rallied and got my shit taken down. Excuse the language if you have children around. But they did that, right? So my channel got taken off of YouTube, but luckily I also had it ported on Odysee a couple of years ago. So every video I ever did on YouTube, CryptTalk podcast, is still alive and well on Odysee. And I'm so happy for that because now I can show you things like this. So as you can see, about a year ago, around the same time that FTX went down, right? But as I studied the market and studied some of these articles on the happenings of what was going on, look at all these different videos, man. You can check this out. The link is in the description. So around that time, I started noticing something going on. This is why I made a series of videos called the Exchange Wars, or 2 videos. And in the Exchange Wars, I was just pointing out how these different exchanges are just, first of all, I pointed out that what FTX did is no different than what every centralized exchange does. From Coinbase to Binance to KuCoin to Kraken to all of them operate the same. FTX didn't do anything different than any of these other crypto exchanges. They didn't do anything different than your bank does. Yes, they took the money you collectively have. They didn't have it all backed dollar for dollar. No, they took it, invested in other things, made money with it, blah, 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 blah. Spent some on themselves, they all do this. None of them have all your money because they don't expect that everyone's going to try to pull it out at once. So they usually maintain between 10 and maybe a best case scenario, 50% of your holdings are there. So I made a series called Exchange Wars, and I was just kind of explaining that. and I was just kind of highlighting how all these different crypto exchange CEOs at that time, they were blowing up the spot, if you ask me, because they're all pointing fingers at each other like, oh, I bet you Coinbase doesn't have, like one CEO would tweet out how, oh, we have all of our depositors' money 1-to-1, which is cap. I bet you Coinbase doesn't. And they would do like little stuff like that, throwing each other under the bus. And it was all cap, really. And I made the videos and I'm saying like, yo, you guys basically, they're basically just blowing up the spot. They're basically like, you're really just making the spot hot. You're making the blockchain hot, man. Because now you're increasing the visibility. You know what I'm saying? You're putting more attention for these different regulators to want to inspect each and every individual crypto exchange. Then I did a video called My Reaction to Some Interviews of Binance CEO. And I was just showing you like how he was answering some of the questions when he's being interviewed. And basically it all came out that no, he didn't have all of that money. Like he doesn't, none of these centralized exchanges have all of your money. The only ones that do are the decentralized exchanges, because people like us provide the liquidity. And it really came out that Binance didn't really have it when they had to halt trading for their stable coin, because they said, oh, well, we have it wrapped up in this bank over here and blah, blah, blah. Like, no, but you guys blew up the spot. That's the point. And that's what I was saying then. He blew up the spot. These exchanges that were going to war with each other, trying to tout how they're the best ones and they really have this and that, and see, these guys don't have anything. And then CZ tried to tweet, and then he erased it, but they already screen shared it before, or screen grabbed it before. He was trying to get Coinbase collapse. Now understand, Coinbase is already in it. Coinbase is already good for the US. That's why Binance isn't. Coinbase is already in good. They're publicly traded, blah, blah, blah. Yeah, the SEC is doing their bull-ish like they do with everyone. But at the end of the day, Coinbase has been chosen as the exchange for the United States. Like a lot of these ETFs, they hold it with Coinbase. Coinbase is not going anywhere. So when you blow up the spot like that, now they're going to investigate you, homie. And now you are waiting to be sentenced. And that's part of the immaturity of when I say immaturity, I mean, this is still a new asset class, right? So it's partly that, there's going to be the growing pains. There's going to be some collapse. There's going to be some people that crumble. There's going to be all that stuff's going to happen. So anyway, Zhao's lawyer, William Berg, declined to comment when asked about the postponement. If he's out on $175 million bail, run, CZ. They're going to do you bad, homie. You know what I'm saying? So basically what they're saying is that, okay, he pled guilty November 21st to a charge of failure to maintain an effective anti-money laundering program at Binance, the world's largest cryptocurrency exchange. As part of the plea, he agreed to step down as Binance's chief executive officer and pay $50 million in fines. Binance, at the same time, agreed to pay $4.3 billion in fines and restitutions as part of his guilty plea to conspiracy to conduct an unlicensed money transmitting businesses, conducting such a business and violating the International Emergency Economic Powers Act. In layman's term, what all that gibberish means is that people were using his exchange and they suspect some of them were money laundering or aiding terrorists with using his exchange to do so. It doesn't mean he knew it was going on, but they're saying, well, you didn't make it safe enough and secure enough to where it couldn't happen. And honestly, that's straight bull. That's bull jive all day. That just shows you how deep this thing goes. This is how feared. Remember, there's stages to this thing. First, they ignore you. Talking about the crypto industry. First, they ignored it, Bitcoin specifically, but I guess it it's for all of the crypto and blockchain market. First, they ignore you. Then they mock you. They just make fun of you. Oh, that's a bubble. Rat poison squared, as someone said, Warren Buffett. Then they fight you. That's where we're at now. So they're fighting, but then you win. And we're transitioning from the fighting to winning, but there's still some fights left. And at the end of the day, I think that this is all garbage, man. I really don't think there's any reason for CZ to be going through what he's going through. Not when we have all these. I mean, like, imagine that CZ and Ripple being charged by the SEC, having to go to court. In this case, having to plead guilty and possibly face jail time. But GS Partners, they just start getting around the GS Partners. My channel got taken down for exposing a criminal enterprise. That's why my CryptTalk podcast channel got taken down. I only had like 1,400 subscribers, so it wasn't that big. But that's why my channel got taken down. Luckily, it's still been archived here, so all the videos are still here. As you can see, I've been talking about a lot of this same stuff. Carrot bars. Look at this, man. I got a lot of. Oh, shoot. You can't see that. I've been talking about a lot of different things. I've been pretty spot on about what I've been saying. That's why I'm happy that this is here, so people can go back, review the archives, and they can see, I've been saying this. So luckily for blockchain decentralized social media sites like Odysee, it's still up there, but you can see this kind of stuff I've been talking about. But I mean, that's just it's like they're not really trying to cut down criminal activities like that. They're really just trying to do a bag grab. They're trying to just snatch up some money. They're trying to keep the market in check. Because like I said before, I know it's going to sound like a broken record. I know when people that, are advocates for crypto, I know when we say this, we sound like lunatics, right? We sound like we're hyping up the set. Oh, the banks are afraid and crypto's going to. Nah, it's not really just capped like that. I know what it sounds like, especially in the midst of all this coin's going to go to $1 million and all that crazy, all the moon boy talk, which I don't get into. I know what it sounds like, but you can see it's actually manifesting right in front of your face. Yes, they have to keep wraps on the crypto game. They have to keep people uninterested in crypto. They had to attack all these companies. They had to keep it off the mainstream because if too many people knew, like if the majority of people in the world knew or know what Bitcoin is, what blockchain technology is, what DeFi is, you think the banks are collapsing now? You think liquidity is moving from the banks now? You think they're closing branches now? Who would keep their money in a bank at 0.5% when you're only getting paid 0.5% when you can stake a stable coin? And a stable coin is essentially a central bank digital currency. The same central bank digital currencies they're creating right now is because they don't want you using stable coins. They want you using their fiat currency. So they're going to create central bank digital currencies, which are basically knockoff stable coins, highly centralized, highly programmable. If you know, you know. But when saying if everyone knew that you can take your, you could take your money, turn it into a stable coin and get 8% for holding it instead of 0.5%, what do you think people are going to choose to do? When you can lend and make money the same way banks do and not have to worry about the borrower going default because they're borrowing with collateral debt position. When people realize that you could pretty much refinance your home on your own with your own terms, you don't need an intermediary, you don't need none of that, and you could do that with the crypto. You don't have to sell it. You could borrow against it, and then the payment terms are your own. I've done this. This is why DeFi is under attack. This is why staking is under attack. This is why exchanges that offer these services are under attack, and this is also why all these same banks are looking to do the same thing. They're writing love letters to the SEC to get into the market so that they can offer the same services that you could do yourself. And once they get all of this, they're going to, as you've seen, they're going to mainstream Bitcoin, but they're going to steer people towards BlackRock's, Fidelity, Wells Fargo, blah, 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 because most people aren't going to know they could do it themselves. They're going to mimic and clone everything that already happens. The digital shift is already here. You can't stop it. I know there's been people like, I've seen them on Facebook. I'm going to wrap this up, y'all. I've seen it on Facebook. I've seen it on different platforms, and they're like, oh, man, the money is going digital. They're going to take hard cash out of circulation. Yeah, of course. What do you think? We went from rocks to tulips to gold and silver to paper to checks to credit cards. Yes, we're going digital, man. Why are you worried about it? Oh, because you don't have any alternative. You don't know enough about the futuristic to stay ahead of the curve. But let me I hate to drop the spoiler on you. 90% of the money in circulation is already digital anyway. In the US, at least, 90% of the money is digital. Do you think when they did those stimulus packages and they printed out that $8 trillion that the money counters were really going? No, they didn't really literally print out physical cash. All they did is went on a computer screen and enter. Create it out of thin air. They basically cryptocurrency'd it in a way. One more thing before I get out of here. I don't want to shit on anybody, but I got to just let people understand. Shiba Inu price could become real. Or okay, so was that 10th of a penny? They're saying they're going to knock zeros off of this Shiba Inu. It could become a reality as the Shiba Inu insider reveals crazy Shibarium momentum. All right, I'm just going to show you guys this because I know a lot of people, especially new people, people who don't really understand how supply, demand, tokenomics, market cap, circulating supply works. And we still have a lot of people that really think Shiba Inu is still going to make them rich. I got to be honest with you. If you ain't got rich off of Shiba, you're not going to. I'm not saying you can't make money. I'm not saying Shiba Inu can't make you money. I'm saying the kind of gains that you're looking for, they're done. I'll explain that later. So in the wake of my discussion with Satoshi Kusama, I'm limited in what I can disclose. So this is like one of the creator's buddies. The creator, I believe, he disappeared like last year. He's like, I'm done, closed down all of his everything. He said, I'm limited in what I can disclose, but I'll share this much. Our objective is to wrap up everything by this year's end with the complete realization of our vision targeted for 2024, 2025. While it's not a guarantee, it stands as our fervent aspiration. Lucille further emphasized that potential transformative impact of Shibarium upon completing all projects, highlighting the substantial utility that will be unlocked, blah, 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 blah. They're trying to go to their own blockchain, right? They're burning up a lot of tokens. And like I've said before, if you're in a situation where the only way the value of your coin can increase is by you burning it, that means by default, you understand you've created too many. Like if your strategy is please burn these coins, who's going to burn them? Are you going to burn yours? Probably not. Like if your strategy depends on, first of all, and I'm going to say this for Doge too, because I think 5 billion Doge are created every year. So I'm going to say this for Doge too. If you're in a position with your investment that you have to hope that tokens get burned for you to have a chance of making money, you're in the wrong project. If you're in a position where you have to hope Elon Musk or somebody prominent on social media advertises your coin for the value to increase, you're in the wrong project. Like I said, I'm not saying you can't make money with both these coins, but here's what I will say. I'll start with Doge first. So Doge, because so many Doge are created, I believe like more Doge are created a day than there are Bitcoin's total max supply. Think about that. There's $21 million Bitcoin that will ever be created. I think more of that is created every day in Dogecoin. And Dogecoin was really created as a joke to mock the crypto world. I've made money off of Dogecoin by accident, pretty much. I told that story before. I'm not going to get into it this time. But so Dogecoin last bull run went to 73 cents, I believe. And it was spearheaded by the pumping and advertising by the likes of Elon Musk and Mark. What's that dude that owns the Mavericks? Mark Cuban. They went on a big, you know what I mean? They went on, different shows. I think Mark Cuban went on the Ellen DeGeneres show and he was whatever, shilling. And then Elon Musk went on Saturday Night Live. And I explained what was going to happen before it happened. You can go back to Odysee and check it. I told people, yo, don't fall for this. Get in right now if you're not already in, that's fine. But understand that this thing is, they're going to dump those bags on you. And that's exactly what happened. They dumped those bags so quick. I can't prove it was them, but I'm certain it was. And right after those bags dumped, the CEO of, I forgot what bank, Goldman Sachs, comes out and says he's retiring after 20 years because he made so much money off Doge, he's starting a hedge fund. That means he at least made $1 billion. You don't start a hedge fund with less than maybe 100 million and then a whole bunch of people that's getting in it with you. You don't start hedge funds with less than $1 billion. So, but here's my point. It got to 73 cents. I'm talking about Dogecoin. That's the last all-time high. Right now, it's probably like 5 or 6 cents. But in order for it to get to 73 cents this time, because now we've added another 20 billion to the supply, because I think it's 5 billion a year that gets added. So now there's another 20 billion in supply. So now for it to reach that same number, there has to be significantly more demand, which in a bull cycle I won't rule out. Same with Shiba Inu. For it to get to the last all-time high, you're going to need even more people. The demand has to even be higher. But here's the problem. For many people who are holding Shiba Inu right now, they bought at the all-time high. The ones who got rich dumped the bags. The ones that got rich, they got Shiba Inu before you can get it on Coinbase. The ones that are holding the bag, they only got it once it hit Coinbase, which is around the all-time high. So now, in order for them to break even, they have to hope that the previous all-time high is matched. For most people, that will only break them even at this point. But are you gonna sell it then? No, you're gonna expect to make more money. So let's say it doubles last all-time high. Is that gonna be enough? Probably not, because you're probably gonna be greedy, because if you're still holding Shiba, you're probably not very sophisticated in crypto trading. So then you're probably going to wait for it to go 10x, and it's not going to do that. And then next thing you know, you're going to be holding the bag again. That's exit liquidity for the smart ones, but whatever. And here's the other problem. There's already 1,000 Shiba Inus now. You know how many meme coins are in existence now? You know how many different little low market cap projects that actually have utility, unlike Dogecoin, unlike Shiba Inu. I'm not shitting on people who hold Shiba Inu. What I'm saying is be very careful, be very smart. They're saying they're going to do this and that. They're trying to build up this momentum. I wouldn't trust it. Yes, I believe that if you were to buy Shiba Inu right now, there's a chance that could make, you could 5 to 10x. Who knows? I don't know. You might be able to,